I think that if you're an institutional investor or a conservative investor, right, you can buy Bitcoin, hold it as a store of value. You can buy digital equity or digital credit instruments backed by Bitcoin. That's all fairly straightforward. I think in the other part of the industry, the digital finance part of the industry, it's very driven by technology. It's very regulatory intensive, and then it's unclear. How will every jurisdiction, view every regulation? Mm-hmm. So it'll be a bit more complicated, but, we're talking about extraordinarily exciting new ideas, an artist, a celebrity that could own their own brand, and, a membership that can be tokenized, a ticket that can be transferred. So there are a lot of things that'll happen, and they'll be transformational and innovative, but they'll require more legislation before you're going to find your favorite celebrity do it. They're going to want to make sure they're not getting sued by the SEC.
Hey guys, welcome to Everyday Finance. Michael Saylor discussed the unexpected surge of speculation that followed. Strategy's transfer of more than 43,000 bitcoins across over 100 addresses, as well as the precipitous decline in Bitcoin's price from 126,000. The transactions turned out to be ordinary. Despite the fact that many traders were concerned that this was a hint that a huge sell-off was about to begin, especially considering that Bitcoin had dropped below 100,000, Arkham Intelligence has confirmed that the moves were merely a part of Strategy's rotation from Coinbase custody to a new custodian, which is something that they have been doing for some weeks. A significant portion of the Bitcoin never came into contact with an exchange, and the moving of addresses was more likely an indication of internal reorganization than of liquidation attempts. In response to the spreading of rumors, Saylor personally intervened to put an end to them, and made it quite clear that Strategy was not actively selling anything.
Well, I think that we started with the early shareholders of Strategy. They were Bitcoin and crypto believers who were prohibited from buying Bitcoin due to regulations in the various markets. So you're a Bitcoin believer and you're a retiree and you live in the UK and you have all your money tied up in your UK retirement plan. It's illegal, impossible to buy Bitcoin with that money, but you could buy a stock, so you'd buy MSTR. Same in Australia. Actually, everywhere in the world, there are large pools of capital that are tied up in these tax-advantaged accounts, IRAs, 401ks, etc., where you might be able to buy a security, but you can't necessarily buy, you can't just say, I want to buy a bunch of my favorite artist paintings that are, at Art Basel. So the early believers were the crypto enthusiasts that had capital tied up. And mainstream investors, big investors that actively manage funds at Capital Group or Morgan Stanley, that they believed in the Bitcoin thesis, but they had pools of billions of dollars that were mandated to make equity capital investments. 99% of the professionally managed money is mandated to equity or credit. They can't invest in a commodity. So we offered the first equity to the equity capital investors. And what we followed on next was a set of convertible bonds. We became the biggest convertible bond issuer in the world. And they were the most successful convertible bonds, and there was a lot of money earmarked to convertible bonds. So after we became a substantial part of that market, we outgrew it. And then we went on to preferreds. And in the preferred market, we started creating these publicly traded digital credit instruments. They were targeted at a different user base. I mean, the person that wants to collect a 10% dividend forever, but they don't want the Bitcoin upside. It's like, okay, I hear you when you say you expect 30% a year for the next 20 years, but just guarantee me the first 10 and you can have the next 20, but take the volatility away and then take the risk. Mm-hmm. Right? There's a lot of people that would rather have 10% after tax with 1/100th the risk, right? Yeah. And so that's a different class of investors. So we have rotated from the true believers to the hedge funds that, like, the Millenniums and Soros and Citadels that wanted to trade and hedge the convertible bonds, to the credit investors that want long duration, sophisticated credit. And then with Stretch, it's just money market investors. I have some money, I just want more than zero, but I don't really want to risk the principal so much. And so that last set of investors are, retirees, mainstream retail. I think we had $600 million of retail demand for our Stretch IPO in 2 days. So in 48 hours, we had $600 million of demand, and that was an order of magnitude larger than the retail demand for our other, instruments. So right now, this is migrating to family offices, retail investors, high net worth individuals, and of course, fixed income investors like, PFF, which is like BlackRock's preferred fund. I think like 3.5 to 4% of that fund is invested in our credit instruments, which didn't exist 12 months ago. So we're now starting to move into credit indexes. Of course, you're a credit investor, you have to buy credit. You're an equity investor, you have to buy equity. We're also in equity indexes. For example, our biggest shareholders are Vanguard and BlackRock through their passive equity index funds. So there's a lot of pools of capital in the world. Some of them, if you lived in Africa and you needed to flee the country and you didn't trust your bank, I would say buy Bitcoin, put it on your own hardware wallet, because you can't trust the bank.
Right.
But that's one class of Bitcoin investors. But if you're an investor in the United States and you have pools of capital earmarked to equity or credit, then you probably want something created by a company like ours. If you look at the digital assets industry today, you can divide it broadly into two segments. One segment is digital capital, and that is Bitcoin. It's dominated by proof-of-work networks. Bitcoin is 99% of all the energy and all of the capital on that side of the industry. And digital capital means digital gold, and that means, I want to buy something without counterparty risk and hold it for 100 years. And what do you do on top of gold? You issue credit. For 300 years, the Western world ran on gold-backed credit. All of our currencies, all sovereign debt, all corporate debt was, in essence, a form of gold-backed credit. So the part of the industry which is most traditional and conventional is digital capital, digital credit, all basically centered on Bitcoin and Bitcoin treasury companies, and that's what our company strategy does. The other half of the industry is digital finance. And that is all about tokenizing currencies, tokenizing securities, stocks and bonds, tokenizing real-world assets, tokenizing brands, right? It's Joe Rogan token, right? It's a meme coin, but it's also the dollar, right? It's also a stable coin. So that opportunity is, why don't we create $10 trillion worth of stable coin and export our currency to the world and move the money at the speed of light and let the computers trade with themselves 1 million times a second? Why not? And that's also about capital formation. Like, there's 40 million companies in the United States. Why can't they all just issue their own token to raise capital, right? Tokenize your country club membership, tokenize your restaurant, tokenize your hotel chain, whatever, Katy Perry token, Joe Rogan token, everybody token. Right now, you want to go public, it's $40 million in 4 years and an army of lawyers. Well, what if I just wanted to spend the weekend or 4 hours or 4 days and I wanted to raise money for my $2 million company or $20 million company? So capital formation is another killer application of digital finance. The third killer application is I tokenize a share of Apple stock. Okay, why can't I just send Apple stock between India and Pakistan on Saturday afternoon on an Android phone? Okay, what are you doing? You're basically moving the securities market at the speed of light. Everybody wants 24/7, 365 trading. And if I can self-custody my Bitcoin, why can't I self-custody $1 million worth of Apple stock? And if I can self-custody, maybe I can actually get bids from the highest bidder, and I can send $1 million of Apple stock to Singapore and get paid for it. So this entire area of digital finance, this is very entrepreneurial. It's all about innovation. It's much more sophisticated, and that is the other half of the crypto market. Now, the first half of the market, digital capital, digital credit, that's got regulatory clarity now. right? Bitcoin is digital capital. The President of the United States has said it. You know, it's been the Secretary of Treasury. They've all clarified that. So that's pretty much just about issuing traditional conventional credit instruments, taking them public on capital markets. And if there's any hoops to jump through, it's like, how do I sell Stretch in euros in Switzerland and get the sign off from the European Union, the Swiss regulator, the exchange, right? But it's not new law. It's traditional finance law. The other part of the equation requires clarity. I mean, literally the act clarity. And so the next big crypto bill is the bill that defines and creates the bright lines and empowers what can you do with digital currency, what can you do with a digital token, how do tokenize my share of stock? How do I tokenize, you know, STRC and let it trade at the speed of light in Singapore on the weekend on a crypto exchange, right? It's not clear how to do that yet. Is there demand? Yeah, there's $100 trillion of demand, but I think that there's bipartisan consensus that we need that bill. That bill will get passed. We don't know what the final bright lines in the bill will be, and once the bill is passed, then it'll be clear, you know, what you can do and what you can't do. And so I think that if you're an institutional investor or a conservative investor, right, you can buy Bitcoin, hold it as a store of value. You can buy digital equity or digital credit instruments backed by Bitcoin. That's all fairly straightforward. I think in the other part of the industry, the digital finance part of the industry, it's very driven by technology, it's very regulatory intensive, and then it's unclear, you know, how will every jurisdiction, you know, view every regulation. So it'll be a bit more complicated, but, you know, we're talking about extraordinarily exciting new ideas, you know, an artist, a celebrity that could own their own brand, and a membership that can be tokenized, a ticket that can be transferred. Right. So there are a lot of things that'll happen, and they'll be transformational and innovative, but, you know, they'll require more legislation before you're going to find your favorite celebrity do it. They're going to want to make sure they're not getting sued by the SEC.
Saylor emphasized that. Strategy is continuing to buy Bitcoin on a daily basis and has plans to publish even more purchases in the near future. Just this week, the corporation received an additional $50 million worth of Bitcoin, bringing the total number of Bitcoins it possesses to 641,692. This is more than 3% of the total amount that will ever be available. A constant message was conveyed by him, which was that pullbacks are opportunities for buying rather than warning indications. At the same time, Robert Kiyosaki brought his own point of view to the discussion regarding the market by stating to his millions of followers that the real cause of the global meltdown is a shortage of cash. All over the world, he reiterated that he is not selling his Bitcoin or gold, noting that the decline is not the result of assets losing their actual value, but rather a severe liquidity shortage that is causing investors to rush for cash.
I think that the key to understand Bitcoin is it is like owning a piece of cyberspace. It is the world reserve capital network. So if you're looking at a world that's going to have hundreds of trillions of dollars of capital on this network, and if we're looking at a world where you're going to see trillions and maybe tens or hundreds of trillions of dollars of credit on top of the capital in the network, right, you might want to own a piece of it, right? What I say is the United States purchased 79% of the land mass of the country. 79% of the United States of America was purchased for $40 million. That's all of the Louisiana Territory. That's all of Texas. That's all of California. That's all of Alaska. We purchased it before we knew there was going to be a Hollywood, before we knew there was going to be a Silicon Valley, before we knew that anybody would want oil, right? We purchased Alaska 1867. It was Seward's folly. He was a fool for doing it. It's got trillions of dollars of oil underneath it right now. So if you can actually purchase the future, if you can own cyberspace, you ought to, right? You know, the Dutch, I think they purchased Manhattan for like a few guilders and glass beads or something, right? So it's very valuable real estate. You know, in the same way that you want to control the world's reserve currency network, The corollary of that is, why should the U.S. actually sell $10 trillion of stablecoins? Because money wants to move at the speed of light, and if we sell the 10 trillion of stablecoins, and if our companies run that network, we will control currency for the next 100 years. And so I think the United States ought to dominate the world reserve currency, and it ought to dominate the world reserve capital network. We're the biggest holder of gold, and if I said to you, would you like to own the majority of the oil in the world? Well, John D. Rockefeller thought yes, and we were the biggest generator of energy, due to Standard Oil, at the turn of the century, and that's why we won World War I and World War II, because we were the energy dominant leader. Well, Bitcoin is digital energy, right? Either you own it and control it, or somebody else does. And so I would just make one more point. If the U.S. doesn't, they should encourage U.S. banks, U.S. investors, U.S. corporations, and taxpayers to own it, right? It's not necessary for the U.S. to own it outright, but it's very, very critical that U.S. banks, U.S. investors, U.S. corporations own it and control it, in the same way that it wasn't necessary for the U.S. to own all the oil, but it's pretty necessary for a U.S. corporation to own the oil. To the Bitcoin skeptics, or to the what skeptics?
To the skeptics of Bitcoin and also just broadly crypto.
My message is if you live in Argentina and you've watched the currency collapse completely every 20 years for the past 100 years, and if your family was impoverished 5 times in the century, and an engineer named Satoshi came along with a way for you not to be poor and destitute, and he said, well, it's no more difficult than just put this wallet on your iPhone and now you don't have to be poor, then you would be utterly captivated by that vision. And that is the plight of everyone. If we go on my hand and say, how many people have lived in societies where they had their property rights and their wealth stripped away from it? It's everybody in Africa, everybody in South America. Brazil's currency collapsed, Argentina's currency collapsed, Cuba's got no currency, Venezuela collapsed. Everybody in the Middle East, people in Turkey right now. Russia collapsed 30 years ago, Russia's collapsing now. Everybody in Ukraine, everybody in China doesn't trust their currency, right? Everybody in Europe doesn't trust their currency. So if you're a skeptic, you must be an Upper East Side trust fund baby, and you're lucky enough to be born rich in the only country in the world where the currency didn't collapse in the last 100 years. And your currency's lost 99.9% of its value over 100 years. The US dollar has debased 7% a year on average for 100 years. So you're probably smart enough, if you're wealthy and a skeptic, to know that you shouldn't store your family's assets in cash dollar bills. You're probably smart enough. You're privileged enough to be able to invest in U.S. real estate and U.S. equities, because that wouldn't work in any African real estate or any African equity, right? Or any North Korean equity, or et cetera, any Chinese equity. Wouldn't work in Japanese equities either, right? In fact, I could go on and on and on. So you're a privileged person that happens to be rich or happens to have money that's invested in the world's most secure assets in the U.S. But Bitcoin is digital capital, and it's for everybody else in the world that wasn't as privileged as you. For them, it's the difference between 7 billion people living in destitution and 7 billion people having hope. And so Bitcoin is an idea whose time has come. If you're one of those people, right, you're going to cling to it like a diabetic would cling to insulin, right? Before Bitcoin, every company in the world, everybody in the world is a type 1 diabetic. They cannot store economic energy.
This liquidity squeeze, according to Kiyosaki, will force governments to engage in what he refers to as the big print, which is a massive round of money creation to patch growing debt loads. Kiyosaki anticipates that this outcome will ultimately strengthen assets such as gold, silver, Bitcoin, and even Ethereum, as confidence in fiat currencies continues to erode. He went on to say that the majority of panic selling occurs among individuals who are in desperate need of cash, rather than among long-term believers, and that he intends to purchase further Bitcoin once the fall has stabilized. highlighting the fact that the cap of 21 million coins is fixed. In the meantime, the general market sentiment has deteriorated into an acute state of anxiety, and some traders have referred to it as a potential accumulation zone. However, analysts at Santiment have cautioned that actual bottoms typically present themselves only when expectations drop even further,